Hey, Bulls and Bears, it's Friday, October 14th, 2022. We're about halfway through the month of October, and time is flying, and things are changing very quickly and changing for the worse when it comes to the economy, the financial situation of most people here in the U.S. Things are about ready to get a lot worse. I know that sounds like a repeat of what I've been saying, but so far, look what's happening. Everything is getting worse. Another high inflation print. Inflation continues to get worse, not in all categories, but overall, when we look at all the different things that we have to spend money on, things are getting worse. We did see a drop down in gas a little bit. California here, not so much, but in some states, gas took a drop. That's going to be temporary. We're going to talk about that and a lot more today. We got a lot to get caught up on here. First of all, the gasoline price. The U.S. has been burning through our reserves, our strategic reserves. And this is not good. The U.S., we've basically been burning through our strategic oil reserves. These reserves were meant to be there in case of an emergency. Well, we're burning through it as if there was an emergency. And if you look at the budget of most U.S. households, it is an emergency, but it wasn't meant to be this type of emergency. It was meant to be a severe shutoff or shutdown of the oil supply. Well, you can argue that that's the case also, what's happened here in the U.S., but now we've got OPEC cutting oil output, and the rumor is that the reason that leaders here in the U.S. decided to burn through these oil reserves is to keep the price of fuel suppressed through November for obvious reasons. So we think here that after November, we're going to see big upticks and increases in oil and gasoline. And some people say that's too awful to be true. Gas prices are already pummeling a lot of people. But yes, it can get worse, and it's going to get worse, in my opinion. I know that sounds like a repeat of what I've been saying, but prices are going to get higher even though they're already high. So it's going to get worse, and it's going to be really painful. This is going to be an economic collapse. Stock market may not collapse, but the average U.S. household financially, from a budget perspective, is collapsing. So people hear financial collapse or economic collapse, they think, okay, falling stock market, crashing prices, crashing car prices, crashing home prices. This is going to be an inflationary collapse. It's going to be a collapse of your purchasing power, but prices will still remain high. You're going to see some deflation in some areas, namely automobiles and housing, but it's not going to be as big as some expect. That's what I'm afraid of. All right, but let's talk about this. The oil reserves now are the lowest they've been since the early to mid 1980s. The U.S. oil reserves, the lowest since the early to mid 1980s. So we're talking 40 plus years. That is not good. Brace for higher gas prices. All right, so let's talk about some other things here. Mortgage rates are going to go even higher. We've already hit 7%, dropped back down, went up 7%. It's going to go even higher. The 10-year bond, folks, has surged to over 4%. And remember when I said about 6 to 12 months ago that as soon as it hits 3.5 and beyond, we're talking about the 10-year yield, you're going to see noticeable increases in the mortgage rate. That's exactly what's happened. So more of a slowdown in the housing market is to be expected. This is good news for those waiting to buy a home, for those waiting on the sidelines with cash, for those people looking to sell a home. You may want to hurry up because things are about ready to get a lot more difficult for home sellers. And this spike in this 10-year yield, this is the biggest spike in the 10-year yield that we've seen going back to over 15 years ago now, about 17 years ago. And it's just going to go higher. The Fed is continuing to unwind their balance sheet. I don't have the chart in front of me, but their balance sheet, what the Fed has, what they purchased, all the assets and goodies, bonds that they purchased, all the debt that they purchased totaled nearly $9 trillion. Now, the unwinding that they've been doing since the beginning of the year, March more so, was down to about $8.75 trillion. So shed nearly $250 billion off of that balance sheet. And look the carnage that's already occurred from this. Look at the rise in rates. Look at what's happened in the housing market. And this is just $250 billion that the Shed has unwound or got reduced off the balance sheet We're down from 9 trillion. This is just a quarter of a trillion. We have a long ways to go. Does anyone think that the Fed's going to be able to unwind much further without a complete economic implosion, with rates spiking even higher? It's going to get very interesting. I hope the Fed does stay the course, because the only way out of this is a major correction. That's going to be a lot of pain for some people. For other people that are prepared, that are waiting for this to happen, that knew this was going to happen, probably a lot of you here on this channel, it's not going to be so painful, because we're ready for it. We're not going to be surprised. We're not going to be shocked. But all the articles that I've been reading, it's shock, it's surprise. Inflation went higher. Of course, inflation is going to go higher. No long-term solutions are being implemented. Burning through the oil reserves, that's not a long-term solution. That's why they're called reserves. It's limited. And this is going to get really bad, folks. So buckle your seatbelts. I hope everyone's prepared as much as possible. All right, so let's move on a little bit here. This inflation, though, this latest number that came out, inflation going higher, getting worse, is going to definitely seal the next at least 3/4 of a percentage point rate hike out of the Federal Reserve. So the central bank's going to keep hiking as far as we can see. I think something major, something big is going to have to break before they reverse course and start up QE again, start buying more assets, dropping rates, dropping the Fed funds rate, and putting the easy money play back into motion. But even right now, rates are still not that high. A 7% mortgage rate seems high if you're looking back 10 or 20 years. But historically, it's not that high. In fact, I think the rates need to be about 10, 12% to get a true correction in home prices, for home prices to come down enough to where most people can actually afford a home. Now, I know that sounds counterintuitive to have a higher mortgage rate and affordability, but when mortgage rates go higher, prices come down. So at the end of the day, you're still going to have a high payment because the rates are higher. But if the principal is less, if the mortgage is a lesser amount, you're going to be able to pay that off much more easily. You can make an extra payment. You can make maybe double payments if the economy is good enough. All right, so more rate hikes, more tightening on the way. And that's a good thing if you're prepared. If you're not prepared, probably not a good thing. Let's talk about the stock market. Today, Friday, October 14th, big drop of the Dow Jones. All major indexes in the red today. Dow Jones down 1.3%. That was a drop of over 400 points. That takes us back down below 30,000. And this is just going to continue. It's going to continue to be volatile, up and down, big ups and downs intraday. We see the volatility. High volatility is typical at the beginning of recessions, at the beginning of bear markets. And it's going to be a downward trend, in my opinion, unless they come out in reverse course. But the easy money is gone, and we need to prepare accordingly. Let's talk about the U.S. dollar. The U.S. dollar, we've seen the dollar strengthen over the past few months because of the tightening, because of the higher interest rates. And what does that do? That makes the dollar stronger compared to other currencies. All these different currencies around the world, they're fiat currencies that can be created out of thin air. And that's why you see the dollar strengthening. Now, long term, the dollar is in trouble. I think we're going to see a drop in the purchasing power of the dollar. And actually, we're seeing that now. If you just look at prices, the dollar is still devaluing. It's just not devaluing as fast as some of these other countries, because other countries are seeing even worsening inflation because the strengthening of the dollar has these other currencies collapsing even faster. And a lot of the world is mad at the U.S. right now. They're mad at what's happening with rates, and it's affecting a lot of other countries. So we're going to have it better actually here than many of these other countries. Now, as far as the dollar being the dominant currency in the world, those days are numbered. It may seem unlikely now since we've seen the strengthening of the dollar, but long term, the dollar is definitely doomed. We've got the BRICS nations, that's Brazil, Russia, India, China, and South Africa, going to a hard asset-backed currency. Not 100% backed, but implementing gold into their currency, and we have other countries jumping on board with that. So the dollar's days are numbered. You may want to hold dollars now because of the deflation that we're going to see in some of the sectors here in the U.S. economy and some of the buying opportunities. But overall, I recommend being diversified. being prepared as far as having some hard assets of your own. I still am accumulating silver. By the way, if you want to fight back against this manipulation, accumulate hard silver, not the paper silver that you can buy, an ETF, anything like that. That's all phony. The silver price, the paper price, or the price you see when you look it up on the internet, that is a phony price. That's a manipulated price that's being artificially suppressed in the paper market via derivatives, via contracts. If you want to fight back, buy the hard asset, the precious metal, buy the coins. I buy the 1 ounce coins mostly. And that way you can fight back against this, because once there becomes this massive shortage of real physical silver, the price is going to disconnect so much from this fake price that you see that's based off of derivatives and paper contracts that they won't be able to hide it any longer. But people see this fake price, this paper price, and it scares them away from buying silver. But the opposite should be true. When the price gets suppressed, that's when you need to buy more. Fight back against this manipulation, and you're going to be glad in the end, because ultimately we're going back to hard assets as currency. Right now, we've got nations out there trying to fight back against the U.S. by going to a hard asset-based currency, some of these nations. We've got the OPEC nations cutting output, which is much to the dislike of leadership currently here in the U.S., because it's going to make fuel prices go higher. And of course, they don't want this to happen on their watch. And it's happening, folks. So keep stacking. Hope everybody liked this. Folks, thank you for being here. I appreciate every one of your support. If you'd like to support this channel and fight back against this fake money, the money manipulators, link down below. Get yourself some hard assets right now. Silver, ultimately, it's going to skyrocket in price. We don't know the exact time frame, but that's the way you can prepare and fight back against this money manipulation. And you also support this channel at the same time. Link down below in the description. Thanks everybody for being here. Big love to all of you. Keep stacking. We'll hopefully see you this weekend with an outdoor, out and about update. Need to get out of the house. Thanks everybody for being here. Big love. Bye. Peace.